Hi, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for October 18th, 2014. This week I want to talk about Thinking Fast and Slow. It's a book I read. I believe the author's name is Kaufman. Our natural tendency is to avoid pain. That makes some sense. We're taught from a very young age that we should avoid pain. It's a survival mechanism and really important to how we get through life. If we make fast decisions, those instinctual moment-by-moment decisions, we bypass the thinking process and revert to instinct. And in trading, that means that fast decisions really mean pain avoidance. We focus in on our fears as opposed to making a rational assessment of whether the trade is a good one or not. Now, to trade well, you have to be willing to lose. And therefore, making the right decision in trading requires that you think slowly. You actually go through the thought process rather than taking the first thought that comes into your mind, which is likely some sort of pain avoidance mechanism. You need to slow down, think about the trade, and determine whether what you're seeing happening in the market is truly a good signal to buy or perhaps a good signal to sell. Don't worry about losing money. Worry about following the rules of your trading strategy. All right, let's get into this week's analysis. As we talked about 2 weeks ago, the S&P 500 broke its, medium-term upward trend line and looked to be headed for the longer-term upward trend line. Well, we had some pretty strong selling and then a reversal this week with some buying pressure into the end of the week. And that's a good sign. It's indicative of a market where the buyers are not dead and that they're still lurking. My fear with this setup, though, is that it never really pulled back to that long-term trend line of support. So while the action late this week was encouraging if you are a bull, I would caution you that we could still see more downside to get us to that long-term upward trend line. Now, in the short term, I like how the intraday charts are shaping up on the S&P and the fact that the Russell is outperforming and was actually up this week. We'll see that in just a moment. But I don't want anyone to take the fear out of the market because it's still lurking there and it could be a factor in the next couple of weeks. Here you see the chart of the IWM, and unlike the S&P 500, it actually closed up this week. And of course, that makes some sense. It's been a much worse performer over the last couple of months, and so it's more oversold. But again, it didn't really get down to some critical support levels where you would expect it to bounce. And so my concern is that maybe we still could get one more downward cycle. Now, based on what I saw this week, I think the market's more likely to go higher than lower. I just think you have to have a little bit of caution because the market didn't fall quite as far as we would expect. TSX made a great comeback this week, largely motivated by a comeback in the energy stocks, which I've been talking about for some time. The market was down big time in the early part of the week, but came back to close above the open. Notice also that this sell-off comes from a new high, not from a falling top. And that usually means that the market will rally back in the short term, and the question then becomes, does it make a falling top and roll over and retest the lows, or does it actually move back to the old highs? And that's something we'll have to watch for over the next few weeks. If it fails to make a new high before breaking down again, then we've got a signal of longer-term weakness likely ahead. TSX Venture has really been decimated over the past month or two. It showed some support action late in the week, as most of the market did. But I think this market is going to take some time to turn around. We really need those commodity prices to improve, US dollar to weaken. We're starting to see the early signs of that, but it's going to take a little bit more time. Now, the Treasury market had quite a wild week. It really spiked higher around mid to late week before settling back down into the upward price channel that it's been in for some time. So the outlook here remains bullish on prices, which means the expectation for lower interest rates continues. Although most people think interest rates should go up with a Fed taking back quantitative easing, the market seems to think that the interest rates will continue to go down. That's the trend in the market. Now, the fact that it really broke higher this week, which meant interest rates really went lower, and then reversed, is just a show of how much uncertainty there is in the market. And so you should expect a fair amount of volatility in treasuries. US dollar hit resistance. I talked about that few weeks ago, and it's pulled back like it should. It came back from some weakness late in the week, and so I think we could see it pop up a little bit this week, but it does feel to me like it's ultimately headed for that upward trend line, the green line that I've drawn on the chart, and that should be supportive for gold and energy prices. Speaking of gold, there you can see the bounce off of long-term support, the green line that I have on the chart. The chart is essentially a pessimistic one. We know that because the tops are falling here. You can see even this top is higher than these ones. So the long-term outlook is pessimistic for gold. It's somewhat oversold. My expectation is it rallies up, tests this downward line, and then we may see a retest of support. So right now, any rally I see in gold mining stocks is probably just a trader's rally, not a real indication of a long-term trend reversal yet. Now that could change, but in the short term, be certainly very short-term oriented in how you trade gold and gold miners. Oil came down as support and has bounced, pretty oversold again, needs to come up to the downward trend line, but it's going to take work for it to reverse that pessimism. We need to see the formation of a rising bottom and a break of that red line. For now, we're seeing what I call a dead cat bounce, which is simply a bounce from oversold conditions, people covering short positions, some bargain hunting, but the long-term outlook still remains relatively pessimistic. But short-term, we should see a bounce back. And finally, the fear chart, really hard to draw lines on a chart that's just so volatile. I always like to say that the best way or the easiest way to make money in the market is to trade the hot market. And right now, the hot market is fear. I've been trading the VXX and its inverse, the XIV, in and out probably 30 or 40 times in the last 2 weeks, and it has been really very lucrative to do that. And I think it will continue to be so until the VXX settles down into this kind of low volatility pattern that we've seen it in for most of the year. I would encourage people to take a look at trading this if you are a short-term day trader. So my outlook then, bearish on US stocks, but neutral in the short term because they are trying to hold that support level, the bouncing back. Same thing on Canadian stocks, bearish longer term, but in the short term, neutral. I think that we could see more of a bounce back. Gold, neutral on both time frames. Oil, I was hesitant to put neutral long term because it really is shaped up with a number of weeks of downward movements. But I think given the long-term support that we have also, I ultimately think that oil probably heads sideways, but with some volatility in the short term that may drive people a little bit crazy. The market has bounced, but will it hold? That's the question, and that's what we want to watch for. Because the market never came all the way down to support, I don't think that the buyers are truly convinced that this is the bottom. So we want to watch for whether a falling top is formed on those charts or if the market can go back to the September highs. Expect lots of volatility in individual stocks, and these individual stocks will get pushed around by the indexes. The small caps are outperforming. That's an encouraging sign, and that may be where we see the hot market come in November. Oil and gold are stabilizing, but they are not out of the woods just yet. Well, that has been the Stockscores Market Minutes for October 18th, 2014. Have a great week in the market and trade well.